this looks like it might be a good candidate for a breakout trade. We're looking at RDC, that's the symbol, Rowan Companies. Now, this company, they are involved with the oil and gas drilling sector. And first things first, you know my views on oil right now. I think that it's bullish in the short term, but bearish in the long term. But as far as the bullish side goes and the short term thing goes, this is a short term trade. So I think that we're about to get a pretty good breakout on this. First off, RDC itself, just going over this oscillator down here, it had some really nice bullish divergences. See, we were making lower lows here, but this was actually rising. That's really good, and it's even breaking through like this 60 level. And I think that as a leader, well, I think it's a leader in the overall energy sector. So let's actually, we'll do a quick ratio of RDC over XLE, and let's see, it's about on par, pretty much flat. But anyway, RDC, what I am seeing right now is a potential for a very strong breakout to the upside. You see with these gaps and these very long white bars representing advances with force, it all comes within this channel right here, and we see going through the channel that we might even have like a breakout right now, depending on where you draw your lines. But pretty much the way that I see it, if this opens up higher, we should be buying it, because this would be a channel breakout. Now, for those of you that do like the for those of you that like to do these kind of breakout trades, and hopefully with a lot of force, I would probably say, what the heck, leverage up, buy an option, and as soon as you are proven wrong, or as soon as you are proven not right, not necessarily wrong, get out of the trade. So what's the actual target on this? Well, first thing that we can do is, if we go into a weekly chart, we can call this maybe a weekly flag formation, and that would give us a price target of about 45 bucks. But let's be conservative first. Simply project the channel from the upside. First target would be at the same exact level at the top of the channel at $40. So it gives us a $40 price target on a stock that was really beat down for most of 2011, 2012, but now it looks like it's wanting to stage a nice reversal upwards. So the actual trade, well, let's zoom in one more time, take a look to see what we can do with this one. If you just want to trade it as a swing trade, actually I want to take a look at the implied volatility measure first, see if options are cheap or expensive. They're right in the middle, so we better just stick with the stock. With this one, you would say, okay, if we get a higher open, let's buy. So let's say we buy at like $33.25 maybe. I'm sorry, it keeps clicking out like that. There we go. We could buy, just to make sure, around, yeah, about $33.25. And we hold it, wait for a nice breakthrough. We can place our stop level if you want to do this for a longer term trade at, let's assume that it goes up and immediately goes against us. So our stop level would be at about 32.30. So stop at 32.30-ish. You got to assess the situation when it actually happens. And our buy point is around like 34.25. And our target, which would be a bit more long term, is around 40 bucks. So there's a nice trade for you. Now, of course, the thing is, you want to make sure that it actually breaks through. Like if tomorrow it gaps up and you actually get in, say at like 34.25 or 34.30, and it's just anemic and it reverses by like 10:30 a.m. and it's below like 34 again, yeah, get out, because that means that it's really weakening with the entire market. So just assess the situation tomorrow, see how things work out, but I like these gap ups for a potential to get into a bullish trade. Alright, thanks for watching.